It's about that time of day again, folks. It's about that time. Welcome back. Welcome back. Joseph James here. I'm a lonely old day trader from SchoolOfTrade.com. Come out and see me every morning, Monday through Friday at 8 a.m. Eastern Time. We run a live trade room with our members from around the world, and we call trades live in real time. We make it pretty darn easy for a new trader to get started in their career. With me today, I've got my partner in crime, my much better looking counterpart, I must admit. Just be lucky I don't have webcams being streaming here today, or else I'd be pretty embarrassed. I'm kidding around with you guys this morning. Got my partner in crime, my colleague and fellow graduate from School of Trade. His name is Marty Errico, and he is our pit analyst this morning, directly from the NYMEX Exchange from Traders Audio. Him and his partner Jeffrey have a wonderful broadcast every morning at 8:50 a.m. Eastern Time. All right, here's the plan for today. Are you ready to rock and roll? Here's the plan. I'm a technical analyst, which means I'm looking at charts. I'll provide you guys with a top-down approach, which means I'm going from slower time frames all the way down to faster time frames. Specifically, I'm looking at what's happening overnight, coming out of London, right? Very important. I'm going to be trading the U.S. morning session this morning, and I want to analyze the session that happened prior to that, which would be, of course, the London session. We call it the overnight session here in the U.S. See, I know if I can look at London, if I can anticipate direction at the open, I can make some pretty good cash by looking for high percentage trading opportunities starting at 8 a.m. Eastern Time. It's relatively simple. Start with the slower time frame first, move our way down to what happened in London and what happened overnight, try to anticipate direction at the open, because if I can anticipate direction at the open, I can usually get my hands on some high percentage opportunities as of 8 a.m. Eastern Time. Now, at the same time, I've got my good friend, my colleague and partner in crime, Marty Errico. He's waiting in the wings. He's got his feet on the ground at the NYMEX Exchange, and he'll be talking about the pit analysis this morning. Very important, guys and gals. We don't get our hands on this information very often here in our home offices. So this, in my opinion, is very, very important. Today, Marty will be analyzing market direction, intermarket divergence, and this would be between crude oil futures, RBOB gasoline futures, heating oil, and Brent crude futures. We'll be talking about market internals, right? Very important, delta, volatility, looking at option prices. Option prices are great leading indicators for where a price is going in the near future. And don't forget about those pit session trading levels. Those pit session trading levels, oftentimes a little bit confusing, right? Remember, I'm looking at, on my screens, the electronic trading hours, whereas Marty Errico is looking at the regular trading hours. Very big difference there, all right? Let's rock and roll. Now you know what the plan is today. Let's begin by looking closely here. And I want to start first at what the layout of the day looks like. Let's begin looking at what today's news calendar looks like. Let's begin really sinking our teeth into what the day looks like here. Now, before I go into that, though, I do want to remind you guys, if you're reading the blog this morning, we do have a rollover alert. Now, this is just for screen traders. The floor traders, they rolled over, I think it was early last week, right? They begin their rollover a little bit earlier. And the reason why has a lot to do with the culture of the different traders. Electronically, we roll over when the volume moves over. Well, on the trading floor in the pit, they're going to roll over, well, ultimately based on when they usually roll over. So it's very cultural, right? They all have their own kind of formulas the way they do things. It's a very different environment there. So we know today that all of us screen traders out there, we have rolled over this morning. And I put a little hyperlink in there for a tutorial on our blog about how to do the rollover if you need help with that. If you need any help getting contract rollover done, come out and see us in the trade room today, or shoot us an email. Be happy to send you more information. But that information is included right on our blog at sidewaysmarkets.com. Let's go over here to the news worksheet now. And looking at the news worksheet, we can see here we are coming out of OPEX Friday. Let's think about that for a second. What are we doing here, guys? What day of the week? What week of the month? What month of the year? Today is Monday. Is it Monday already? Boy, that weekend went by fast, right? See that? Same thing that I think, right? I think other traders will also be thinking that as well. It's a Monday. It's the fourth week of the month. Wow, fourth Friday of the month is this Friday. And, of course, we're going to have also the month of August, right, which is a summertime month. What do we need to know about this? Well, we know, first of all, the month of August is notorious for being lower volume. So we are going to be aware that today may indeed be lower volume because it's inside the month of August. the fourth week of the month. Not exactly, now this is kind of an oddball month we've had because we're listing the weeks by the number of Fridays. So in all reality, this will be the third full week, but this will be the fourth Friday of the month. Very important because now we know we're going into the end of the month. We're going into the end of the month. The end of the month, we oftentimes see Hail Mary attempts, right, from traders from all over the world. We see traders that make relatively, I guess, poor decisions or irrational decisions towards the end of the month, and it usually picks up on the volume, right, the volatility that we see. So we know the month of August, the fourth week of the month, and of course, Monday. What do we know about trading on a Monday? Well, the comment I made earlier, is it Monday already? Did that weekend really go by that fast? Now, obviously, it didn't go by any faster than any other day of the week, but we know as human beings, we always hate to see that weekend come and go so quickly. So couldn't you imagine other traders might just be hitting that snooze button a few too many times on Monday morning? Couldn't you imagine a few traders out there might have missed the morning train right into the office, or may have missed the window right before they hit traffic on the highway going into the office this morning, guys? There's all kinds of scenarios that we can think of why traders will be a little bit late to the party this morning on a Monday morning. In my opinion, Monday mornings usually begin a little bit sluggish, but they usually end pretty darn well. So we look for a late start and a late close on a Monday morning. Now we'd be looking even further into this now. The 19th, Monday morning here, there's no major news. No major news today, no major news tomorrow. And then we finish up the week here. You can see Wednesday, Thursday, Friday. We got some red star news events there. Wednesday, Thursday, and Friday. So, boy, looking at this week right now, looking at the day of the week and the week of the month, it looks like we should expect here a relatively slow Monday morning. It's a Monday without any major news. This is called Rebalancing Monday. Okay, any ideas why they call that Rebalancing Monday? Well, because remember last Friday was OPEX Friday. OPEX Friday means options expired on Saturday morning. What does that tell me now? Well, this morning, traders are going to be getting back into the market to rebalance their portfolio. Many traders had to get out of positions on Friday afternoon or sometime leading up to Friday afternoon last week, and now today they'll be getting back into those positions again, either in the next front month, like we talked about on crude oil, right, or possibly looking for other opportunities elsewhere. What do we know about this morning? We know this morning is expected to be lower volume, but we do have Rebalancing Monday. Rebalancing Monday tells us that we probably will get some opportunities here today, so we've got to be ready to rock and roll. We also know without any major news, though, that there will be times of very low volume here this morning. Just as much as we expect to see some good opportunities, there are probably going to be some times this morning when we'll need to sit on those hands and wait patiently. All right, guys? Looking good. Looking good, looking good. Now that we've got our news under control, or should I say lack of news under control, now that we know what the reality is this morning, let's begin taking a look at some charts. Open up some charts this morning. Now, the first thing I'm going to do is I'm going to grab a look at my slowest of all my time frames. Here's my anchor chart. And I want to show you what we have here in the long term, and then we're going to begin to look at what's happening in the short term. Remember how I said earlier, we're going to be taking a top-down approach to this, looking at what happened over the past few weeks, and then specifically we'll be looking at what's happening over the next few hours. Let's take a look here first. First thing I see is we can easily see this bearish channel, lower highs, lower lows. But now we can see in the short term we've developed into a bullish channel. Now I want to remind you guys that these longer term time frames, direction really is not what I'm looking for. What I'm looking for in this longer term time frame is I'm looking for where my major turning points will be. 106.30, 105.52, 107.41, 108.07. Those are my big numbers here on this chart, because now I know that if I'm looking to get short, I'm going to take my profit and look for a reversal at 106.30. If I'm long, I'm taking my profit and looking for a reversal at 107.41 or 108.07. So as you can see here, these levels of support below us and resistance above us will become very important, especially for our trade management and for being able to cherry pick around trades that we may not want to get into. For example, if I was trying to trade short, I would choose not to trade short directly into 106.30 later on today. So this will give us some of the most important levels of support and resistance that we're going to see. Again, this is the slowest of all my time frames. You can see the last few months of data. You can also see the last few hours, right? Last few days. Now let's begin to zoom in a little bit closer. So what does this tell me? This tells me here now, expect to see a support at 106.30 and expect there to be some resistance overhead. Let's keep going. The next chart I'm going to go to, I'm going to switch from tick charts here now to a minute chart, to a time chart. Here's a 30-minute chart. I like to always include a little bit of time in my chart sequence. I use a very specific sequence when it comes to looking at my charts, but I do like to have at least one of these needs to be time-based. And I'll talk about that more importantly when I go into my live trade room today. So come out and join me. We'll talk more about the value of time-based charts if you'd like to go over that information. What do we see right here? Well, on this chart, I'm looking for a couple different things. I'm looking for trading ranges, right? That's really what I'm focused on here on this 30-minute chart. Trading ranges. I can see we have the previous high of day, 108.17. Previous low of day, 106.56. I've got additional support here at 106.15 to 105.89, and of course 105.60. Now, if I had to guess right now, where would the easiest direction be? What direction do you see here? Look at all the support levels we have down below us. The easiest direction here, as we're going lower, we're going to be bumping into these support levels. So as we go lower, we can see this bullish channel, which we found on that anchor chart. The bull channel tells us we know that buying is going to be the highest percentage trade. So now that we know that buying is the higher percentage trade, well, all we're going to do is wait for one of these levels to hold as support, look for the price reversal, and then get into the buy pattern. What I'll do across the board today is I'll be waiting patiently for price to bounce off of, let's say, 106.56. Once it starts going higher, then I know I've got it in the right direction, and now I'm back to the races using my wave pattern to get long. So the plan today, using our bullish channel, is to wait for price to reverse around any of these levels, 106.56, 106.15, 105.89, or 105.60. Now, if I happen to be wrong about that, and if price just keeps blowing right through everything, if the sellers appear to be on a rocket ship right to the floor, then of course we'll change that attitude a little bit, knowing the bears are in charge. And if we blow right through the previous low of day, I will sell retracements. If we blow right through it, I'll sell retracements. So remember, at every support level that we see, we'll look for a reversal first to buy. That'll be the high percentage. But if we notice the sellers are too strong, we will then look for selling opportunities there below that previous low of day, which of course will be lower percentage because of that bullish channel. Keep that in mind. Higher percentage, buying. Lower percentage, selling. Let's keep going. Now that I know the overall plan today, now that I know we have that bull channel, and now that I know we're looking for that reversal around that 106.56 to 106.15, let's dig in a little bit closer here. And we start going down the line here of faster time frames. And immediately we see here 106.87. We've got a little bit of a hang up here, don't we? We can see the bull channel, but more importantly now, we can see here that we really do want to wait for this reversal. I don't think we have any wide open space here to go lower. As we go to faster time frames, I mean, look at this one. I've got 106.87 and 106.56. Remember the anchor chart? The anchor chart had us at 106.30. Remember that 30-minute chart? Yeah, 106.12. So remember, we have a lot of support waiting for us here as we go lower. Each individual chart is showing me another level of support waiting there below us. So in my humble opinion now, this just throws more fuel on the fire, pardon the bad trading pun, but it does. It throws more fuel on the fire that eventually here, and it looks like I missed a trend line right there. That would be a trend line to draw in there. But eventually here, we should see a price reversal, and that price reversal will be when the market participants now are kind of put out of whack or out of balance, and then we'll get some better opportunities here today. Again, guys, it's early right now. We've got no morning news on a Monday morning. It's rebalancing Monday after OPEX Friday. It's right in the meat and potatoes, those dog days of summer. I can almost smell the hot dogs and popcorn right from the baseball game. It feels like summertime right now. And of course, we have a feeling that's going to continue here today. So be patient this morning, waiting for the reversal here off the support. Be patient this morning for that pace of tape indicator, right, that measures the speed. Wait for the speed to increase to a level that is acceptable to us. And again, keep an eye out for that market personality. The market personality will be very easy to see changing from being very slow at the beginning, and then you'll see times where things will move very quickly. It's when those times begin to move quickly, that's when we need to be ready, willing, and able to act, right, according to our trading plan. Guys, we're going to come out every morning at 8 a.m. Eastern Time and trade this stuff live with me in the trade room. Come out and join me every morning. Before I get there, though, I can't wait to hear what Marty has to say. You know, Marty's been hanging out on the floor here since they opened the doors this morning, I think. He's itching to go this morning here as well. Marty, what's Rebalancing Monday look like to you guys on the trading floor? Is it slow out there? What are you expecting today?
Well, I'm expecting a fairly moderate day in terms of volume, at least here in activity on the trading floor. But before all that, this morning, we're here nice and early for you guys. And first and foremost, I just want to talk about a little bit of breaking news that we saw here across the board this morning, right? So we saw some stuff out of Libya this morning. They reopened all those oil terminals that were, those oil output and terminals that were kind of reopened. Remember they were closed down last week. Now they're all reopened due to that strike and the protest. Couple big oil, not oil minister, but superior ministers of the Muslim Brotherhood. One of their family members or sons were killed in protests. So again, we have some bearish news with all those ports reopening, but then we also have some bullish news due to that geopolitical, you know, unrest over in Egypt. So the bombing in Lebanon as well that happened this morning. So, right, two sides on both sides, a little bearish news, a little bullish news, breaking news, of course, that we always cover throughout the day, which I'll be keeping an eye on. And here's that difference between, right, the pit and the screen. Now, you can see, right, I have my Globex session chart up. You see the channel. We see the wedge. Right now, we're towards the lower end. We're going to be looking for a little bit of a buying opportunity once we get down to these support levels. Remember, we spoke about that last night. We said that we were going to trade down to the lower end of the channel and look to buy that 106.40, right? The 106.0 even, 106 even. But before that, let me show you the difference between the screen and the pit. Now, this is a pit traded chart. This is actually the pit traded contract. And you can see, look at that. We have a little bit of a bullish channel on the pit traded contract. Well-defined, right? Well-defined bullish trend. And you can see now we're going to be at the lows. We're going to try to break through and buy if we can get above yesterday's settlement number this morning in the daily pivot, which we'll go over in just a minute. So a little bit of a difference between the screen and the floor this morning. But as always the case, we're going to look at all of our suspects that we have here this morning. You see a little bit of a bearish mentality so far, kind of just coming down to those support levels, but this is good because we're in a sideways range, we're in a wedge, we're in a channel where we want to trade lower and then we want to buy that support. So, most importantly, this morning we have crude, RBOB, heating oil, gasoline, all of our multiple market divergences trading lower this morning with a sideways tone to it, so don't worry about it. We're going to be looking to come in and buy the lows and trade higher. So that's going to be the deal here. Right, so we have a little bit of a sideways mentality here this morning, but a lower overall. Your Brent WTI spread has been in backwardation today, along with all the rest of our calendar spreads with a little bit of a bearish sentiment to them. But like I mentioned, we're going to come in and try to buy the lows. This morning, if you look with me here, you'll see your dollar index has been just trading a little bit lower this morning here, around 81.27 even. Down about almost 20 points or so. Euro's up 20 points, right? We have the Canadian up 20 points, the British up 20 points, and the Aussie up 20 points. LIBOR is basically just a little bit lower like that dollar. But again, our supply-demand differential, looking at the spreads, right now the October to October Brent WTI spread this morning is trading at about 361. It's in backwardation by 50 cents. So that's the indication right now that we are going lower, but once that spread starts to tighten up, so once we see 340, 330 on the spread, right, then we'll start to see the market turn around and possibly start to buy those support levels. This morning the calendar spreads as well look a little bearish at the moment, but again, they can tighten up at any time and see a little bit of a reversal. We're in the October front month now, so the OCT-NOVI spread right now is trading at about 74 cents on the calendar spread. The OCT-DEES is trading at about 195, and the NOVI-DEES is about 35. So overall, we're going to be looking for that reversal to come in and buy those lows today, right? So that's basically our usual suspects here. Again, we saw that we have some support coming in here around those 340s, right? Anywhere from those 340s, 326, and 106 even, right? We also take a look at the natural gas, and you can see the natural gas is still within its bullish channel, right? We had some buying opportunities before. Now we broke above the 342. So yesterday we spoke about if we break above 342, and we're going to be looking to buy up to the higher end of the channel, up towards our resistance zone. Again, we have 350 as a potential target, and yes, we could simply see that now that we opened up above yesterday's high, right? That 342.80, 342.5 was the level. So now that we're coming in, right, we're going to maybe look to try to buy a pullback once we bounce off one of these support levels here and get up to 350, and then we'll be looking to sell that 350. Main drivers of this market has been weather. We have some bullish weather news that came out on the 6 to 10-day forecast that is representing some bullish prices. So again, the 6 to 10-day forecast was very bullish here in terms of just warmer than expected temperatures, average temperatures, and average temperatures still call for cooling demand. So average to above average temperatures across the United States, according to NWS, that's National Weather Service. So the natural gas could be looking to trade a little bit higher, especially this morning, right, off the heels of the Baker Hughes rig counts. They were also bullish yet on Friday. Let's also take a look now at some levels here as we do every single morning. This morning's absolutely no different. That's your 8 o'clock bell this morning. All right, so taking a look at your levels here for today, August 19th, 2013, you can see that we have here crude. This is your October contract, of course, here. We're talking about October. There you go right there. October contract. Once again, today what we have for you here, your high from Friday, 107.95. Your low, we have 106.40. Right? Closing settlement number was 107.37 was closing settlement on Friday. Just below that 107.50, so that's why we're not having a bullish sentiment this morning, because we fell short of the 107.50. So we're going to try to see if we can make another test of that. Now, the plan from last night was to go in, buy those 106.40s, buy the lows, and if we could buy those lows, then maybe we can make another test and run up towards that high at 108. If we get above 108 even, and we close and settle above 108 even, then we are bullish, right? If not, then we're going to sell the heck out of this high of the range here below those 106 evens. Alrighty, guys, so again, your daily pivot today is going to be 107.24, which we are trading well above today at the moment. Again, below that daily pivot and settlement number 107.24, sorry. A little bit of resistance up above at 108.08. I got 108.79 and 110.34. Support down below. These are levels that we can be coming in buying, right? We got 106.53, we got 106.40, we got 105.69 and 104.14. Implied volatility this morning is holding steady and firm at 24%. The OVX settled the day on Friday at 24 even. Large strike levels that we're trading in the pit. Again, if we can get above that 108, then we will be very bullish, and we'll get up to that 110, even possibly exceeding past the 110. Again, we have money assured to the upside, because as I was speaking about yesterday, most pit traders in the pit, most of our guys in the pit are long, larger locals. They're long, or they have some type of assurance to the long side, because they don't want to get caught with their pants down, so to speak, and they don't want any type of geopolitical news to come in, rally this market, right? These geopolitical risk premiums can rear its ugly head at any time, and this market can rally. So that's why the idea of just putting a little bit of assurance to the upside, buying a couple calls, right, is the plan. They spread the calls to the upside too. So we have interest in the 108, 108.5, and 110 strike. Again, if we get above that 108, then we're good. To the downside, they have the 105 and 102.5 put levels that are kind of assured to the downside, but more money to the upside. Again, implied volatility at 24%, so that's nice. Open interest rising, more participants in the market, 326,117, which is also nice, and that can give us a nice opportunity to buy those lows. And as we kind of continue on, you can see that we have now your September natural gas contract here. Again, the SEP is we're not going to roll natural gas till about next week. And also RBOB and heating oil, again, their options, they expire next week, so that's when we're going to see a little bit more money move into the October contract in terms of RBOB, heating oil, and also natural gas. Right now, we look at natural gas's pit session high from yesterday, which we are well above here. 339.20 was the high. The low is down at 336 even, very thin range of only about 3 cents, only 30-tick trading range on Friday's pit session. Closing settlement number was at 337 even. Daily pivot today is going to be at 337.40, so look at that. We're 4 ticks away from that daily pivot from settlement number. Guys have got a little bit of resistance up above at 338.80, 340.60, and 343.80, and it looks like here we're almost up near that S3, ladies and gentlemen, as we trade kind of towards 345.20, so above the S3. Support down below, 335.60, 334.20, and 331 even. Again, we are going to be looking for that open above the 342 halves, as we're 345.20 right now. So again, we're going to be looking for some upside, possibly maybe even 350, as we're going to try, again, as I mentioned, to come in, right, bounce off a little bit of the resistance that we have above here. Step a little bit of resistance here, right? 347.20. We got 346 half, right? Bounce up into this resistance and then buy a pull back up towards those high prints and then come in and sell those highs, right? So that's going to be the deal here on the natural gas. Very simple game plan of attack here this morning on the crude and for the natural gas. And that's really it on the trading floor. Again, you guys heard the 8 o'clock bell in the background, and we're going to have the pit opening up in just less than an hour, right? We have our precious metal futures products opening up in about 15 minutes, and that's it about happening on the trading floor today. Again, I'll keep you guys posted throughout the day.
Marty Yerrico, everybody. Thank you so much, guys. Marty, thank you for being here today. As always, a great, great presentation, great broadcast. And boy, always good to have you directly from that trading floor, guys. Such a unique way to begin your day. Great to hear, though, how they're kind of exactly what they're seeing on the trading floor here on Rebalancing Monday. Sounds like they're getting ready for a big open, 9 o'clock, the opening bell on crude oil futures. Guys, I'm almost ready to get my trade room opened up here. It's about 8 o'clock Eastern time right now, so I will say sayonara for now. Guys, we're on a 23-hour and 30-minute break. We'll see you guys back here for a Tuesday edition of our crude oil morning prep. Don't forget, if you want tomorrow's attendance link, if you want to come join me for the call live tomorrow morning, or if you'd like to send me any feedback, I'm JJ at School of Trade. You can always email Marty at Traders Audio as well. Don't forget to go out and see them at 8:50 a.m. Eastern Time every morning at Traders Audio, and come out and see me at 8 a.m. Eastern Time Monday through Friday at School of Trade. Thanks so much, everybody. Thank you to Marty and the entire team at Traders Audio, from the entire team here at School of Trade, from Los Angeles, California, signing off for now. We'll see you guys tomorrow morning, 7:30 a.m. Adios, amigos. Bye-bye for now.